Lucid Group CEO and CTO Peter Rawlinson rang the opening bell at Nasdaq on Monday, July 26, 2021, to mark the company's public offering. However, there is confusion in the market with the two stickers under which it's traded, LCID and LCIDW. Today, we'll talk about the differences between the two stickers and clarify any misunderstandings related to the two securities. Welcome back to NewVehicleMedia, your go-to channel for EV stock. Quick reminder, subscribing's free, and liking the video helps YouTube suggest similar videos. Comments are loved and featured in upcoming videos. Lucid's objective is to encourage the adoption of sustainable energy by designing the most engaging electric vehicles, focusing on the human experience. On July 23rd, Churchill and Lucid Motors announced the completion of their business combination, Taking Lucid Public, which is establishing new standards with its superior luxury electric vehicles. The total transaction equity value of CCIV and Lucid is $11.75 billion. At the PIPE offer price of $15 per share, the deal valued Lucid at about $24 billion in pro forma equity and gave Lucid approximately $4.4 billion in cash. Churchill 4's common stock, warrants, and units were all listed on the New York Stock Exchange with the ticker symbol of CCIV before the merger, but it was delisted afterward and relisted as a new company, Lucid Group Inc., on the Nasdaq Stock Market LLC. From July 26, 2021, the common stock and warrants began trading under the new tickers LCID and LCIDW. The SPAC's two securities may begin trading on an exchange independently with their own trading symbols after the IPO. SPACs frequently file a current report on Form 8K and issue a press release informing investors when separate trading may begin. Despite the fact that there were no issues at first, the companies trading under two separate tickers caused some confusion among the general public. The difference: the securities LCID and LCIDW are both issued by the same business. However, they're slightly different. As previously stated, the Lucid Group Inc. began trading common equity and warrants on the Nasdaq stock market following the merger. These two different securities have two different tickers. The common stock began trading with the ticker LCID, while the warrants began trading with the ticker LCIDW. How you may think these two are different from each other will explain both the securities in detail over the next few chapters. Common Equity LCID. Common equity, or common stocks, could be referred to as shares in the stock market. Lucid Group Inc., after going public, started trading its share under the ticker symbol LCID. This security symbolizes the ownership of a shareholder in a firm. Common stockholders elect the board of directors and have a say in corporate policies. Long-term, this type of stock ownership often generates higher rates of return. Common shareholders, on the other hand, only have rights to a company's assets when bondholders, preferred shareholders, and other debt holders have been paid in full. LCID stock opened at $25.24 per share on the 26th of July 2021. It gained 6.3% on its first trading day and, as of July 28, 2021, traded as high as $26.20 per share. Now that we got the idea of what an LCID ticker is, let's move to the security that has been creating confusion in the market lately after the completion of the merger. Warrants LCIDW. The second security that's been trading under the LCIDW ticker of Lucid Group Inc. is the warrant security. Share shows the ownership in the firm. The warrant, on the other hand, does not reflect immediate ownership of the stocks, but rather the right to buy them at a specific price in the future. When SPAC IPO is structured, it provides investors with a unit of securities that includes common stock and warrants. A warrant is a contract that gives the holder the right to buy a specified number of additional shares of common stock from the firm at a specific price in the future. Usually, a warrant is issued at a premium to the current stock price. Public warrants and private placement warrants are the most typical SPAC warrants. The public warrants are normally not exercisable until a business combination event occurs, or at least 12 months following the SPAC's initial public offering. They're similar to options in a way that you can use it to buy stocks. There are a few key distinctions. The first is that, unlike an option, which is simply a traded instrument between two traders, a warrant, when exercised, contributes capital to the corporation. When you exercise a warrant, you're purchasing another share of stock from a firm at a certain price. Warrant conditions might vary significantly between SPACs, so it's crucial to know what you're getting into before you buy. The terms of the warrants can include how many shares the investor has the right to buy, at what price, and for how long they have that right, the circumstances under which the SPAC may be able to redeem the warrants, and when the warrants will expire. When it comes to the opening price of the warrant LCIDW on the opening and the very first day, the security was traded at $11.61 a right. It ended the trading session with an 18.9% gain on its initial option. As of July 28, 2021, when writing, it is traded as high as $13.48 a right. The conclusion: because both securities are traded under the same company name, an investor may become easily confused. It's critical to understand the differences between the two securities, especially in today's fast-paced world where investing opportunities are rare and often short-lived. Since stocks are the underlying assets in the warrant contract, the gain or loss on the warrant security moves parallel to the gain or loss on common stock. The magnitude might be different because of the added premium factor in the warrants. We hope to have cleared any confusion that you have related to the two ticker symbols. If you have any more questions, feel free to ask in the comments section. ICER has the right idea about what an LCID ticker is and believes that the stock will hit the moon high. What do you guys think? Do you agree or do you think otherwise? To learn more about the details of the merger, we've summarized the whole merger and dedicated a special video to this topic. It has the highlights from start to end and gives you an idea of what happened in the merger and how Lucid Motors went public. Feel free to check it out on our channel. That should wrap things up for today. Keep in mind that the subscription is still free and liking helps YouTube recognize your preferences. Thanks for taking the time to watch, and I look forward to seeing you in the next one.